Vitaminka AD Prilep. We are one of the largest producers of food products in North Macedonia. We are the top management of the firm, and we are going to give you at first some insights about our company and what is that we do. Vitaminka is a well-known North Macedonian company in the food processing industry. The company has a variety of products like snacks, coffee, soups, ice creams, sauces, and many other products. We exist for 66 years, and we started as a production company of only one product, red pepper. Vitaminka's 45% of total production is used for markets outside of North Macedonia, and therefore it sells products in more than 30 countries. Our wide range of portfolio products is giving us a great advantage to satisfy a variety of tastes and preferences. Vitaminka got the attention of not only domestic but international competition as well. This is due to the nature of the business and operating in an industry which by itself brings a lot of competition. We are a joint stock company listing our own shares on a Macedonian stock exchange market, having the financial information available for the public. This allows a greater view of our company for catching the attention of potential investors, all with the purpose to grow the business, create a value, and generate a positive profit margin. First, let us give you a little knowledge about our business activities. The day-to-day operating activities of Vitaminka are focused towards earning profits. This means selling our products on the domestic, but also on the international market as well, like Germany, Switzerland, and Canada. When it comes to investing, we're investing into purchasing raw materials, equipment, and large numbers of securities. And finally, we're financing our business through both equity and debt financing, selling shares on the stock market, but also obtaining loans from the bank. The purpose of this project as a top management of Vitaminka is to bring our company into the future. In order to do so, we did a financial analysis that we are going to see throughout this video, bringing our company 1 year ahead from today.
The balance sheet of 2022 is the starting point for our financial analysis, since it represents a snapshot of the net financial position for the year. This is in order to bring the company into the future, since its financial position can change from one period into another, taking all of the already existing accounts of the firm and bring them into the future without missing the past activities, events, and challenges for the company that has experienced and faced. The balance sheet should be prepared according to the appropriate accounting standards, and from the latest individual unaudited financial statements of 2022 for Vitaminka, we can see that our company has prepared the financial statements under IFRS requirements, listing first the non-current assets and liabilities into the balance sheet, and after that the current assets and liabilities. When speaking about the balance sheet, it's important to mention that assets, liabilities, and equity. Assets represent the cost of resources used by the business. From the latest financial statement of 2022, we can see that the company under the non-current assets has reported mainly investment related to the operating cycle of the firm, investments in subsidiaries, investment in property, plant, and equipment, intangible assets, and financial assets available for sale. On the other hand, the current assets section is consisted of receivables, supplies, and liquid cash. Liabilities represent the Vitaminka's obligation that the firm has towards employees, creditors, and other third parties, from which the firm expects an economic outflow. Vitaminka's non-current liabilities include obligations that has to be performed or repaid within 1 year or more, like unearned service revenue and long-term borrowings. Vitaminka's short-term liabilities are obligations that has to be performed or repaid in 1 year or less. Those obligations include payables and short-term borrowings.
Equity represents the number of economic resources invested by the owners at the beginning. These resources can be increased or decreased. Most importantly, it represents security for the creditors. We can find under this section the owner's interest in the company, money satisfied as reserves, and retained earnings not distributed as dividends. We can see that the accounting equation is imbalanced. We take all this accounting to the future by reporting their balance for 2022. In short, we projected that a company is paying each month's salary and utility expenses, is generating revenues from sales of their products to various distributors, is facing obligations towards the bank to repay the amounts and related interest expenses. We also consider the prepaid rent and prepaid insurance and other expenses needed for the stimulation of the production process. The financial analysis in sum is identifying for each transaction which accounts are affected, whether the account balances have increased or decreased, and what is the amount of the changes in each of them. Recording the entries of each transaction into a journal is the next step. Journal entries are then posted into a ledger from each transaction separately, consisted of the balances of each account. Then follows the preparation of the adjusting trial balance, closing the adjusting entries for the year, preparing the adjusting trial balance, and finally preparing the financial statements for the new year.
Since the latest balance sheet is prepared according to the standards of IFRS, we have prepared the statements of 2023 according to the same standards. The total amount of total assets and the total amount of total liabilities and equity are in balance, implicates that there is no error occurred. Equity has also increased during the higher amount of retained earnings kept into the company, but also the additional investments from the owners at the beginning of the year. To see how well Vitaminka has performed during the following year, we have prepared an income statement which shows the generated profit or loss during that year. Also, the income statement is composed from all of the revenues and expenses that were generated throughout that year that affect the financial performances of the company. On the one hand, we have the revenues, which are the amounts earned after selling products and services. On the other hand, we have the expenses, which are the sacrifices made by the company to start and feed the production process of the same company. We have computed the single step but also the multi-step income statement, and we have came with the same net income from 2023. An important point is that the corporate tax in Macedonia is 10%, which needs to be applied on the income before taxes to compute the net income. Overall, the company achieved good sales performance, effective cost control, and also healthy profitability, which are like positive signs of the financial and operational health. To maintain its long-term financial performance, Vitaminka must continue to examine and keep up with expenses less than the revenues it generates.
In order to see if the company remains profitable, liquid, and solvent, which are the main concerns for stakeholders, after overall analysis and financial projections we did for Vitaminka, we computed a few ratios, mainly profitability ratios and solvent ratios, in order to see what the financial position of the firm projected for 2023 indicates in reality. Return on assets, comparing companies' total assets, that is earning after tax and interest. The return on assets of 0.78% indicates that Vitaminka's profit margin is small when it's compared to its total assets. It indicates that the company's use of resources for generating revenue is relatively low. Return on equity is providing external stakeholders with insights about how much efficient is the company in handling contributions by the stakeholders. Vitaminka's return on equity is 0.9%, suggesting that its profitability to stakeholder equity is minimal. Based on the amount of equity invested by the company, does not provide strong return on the stakeholders. Net profit ratios measures net income earned in comparison with the revenues that the company generates. Vitaminka has a net profit margin of 0.71%, which means that the percentage of revenue retained as profit after all expenses is relatively low. It indicates the company has a low profit margin on its sales. Interest coverage ratio measures to what extent the business is able to pay the interest on its outstanding debt. The interest coverage ratio of Vitaminka is 6,833.96%, and it shows that its earnings are more than enough to pay its interest expenses. This implies that the company has solid financial health and that it can easily fulfill its interest payments. The debt-to-equity ratio is giving the proportion of stakeholders' equity and debt from firm's assets. The debt-to-debt equity ratio is incredibly low, 0.002%. This incredibly low ratio signifies that the company has very little debt compared to its equity, even though compared to 2022, the debt of the company has increased. Vitaminka is primarily financed with equity rather than debt, showing a low level of risk. In general, Vitaminka's asset and equity returns are quite low, with small net profit margins. However, it has an incredibly high interest coverage ratio, displaying excellent financial stability. Vitaminka also has a very low debt-to-equity ratio, which increases its overall financial condition in general.
The overall stable position of the company that we projected for Vitaminka is indicating that the company should keep operating with the same line of efficiency, holding its well-known integrity, trust to its consumers, but also showed even better results than the results they showed today.
We can say that Vitaminka is a risk-taker company. Even though the industry itself, due to the large competition, it brings high risk on a continuous basis, but focusing towards growth and continuous innovation helps Vitaminka to overcome any obstacle.
This is our trial balance, and from here we can conclude that some of the accounts are in a negative amount, which can be a result of many situations. We reported a negative amount of inventory, which can be due to lack of compatibility between inventory on hand and inventory recorded. This has to be checked at the end of the accounting period by external auditors. Another reason can be the situation in which return of inventories are greater than the inventories that the company have on disposal. Accounts receivable is also a negative amount, and this can happen in cases when there is an existence of write-offs to customers' accounts for potential uncollected debt or credit when goods are returned. Adjustments are made at the end of the accounting period for depreciation expense for equipment, prepaid expense and insurance with their related expenses, unearned service revenue, sales return and allowances, and others. Here are the two of the most important financial statements that we computed for 2023 as our main guideline for Vitaminka's overall performance.